Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. A bullish white soldier yesterday after the previous session's second indecisive pattern, this time an indecisive doji cross. The possibility that the action either side of last weekend might just be a tweezer top has faded. The top side, which had recently been capped by the combination of November 2020 low at 116.02 and by the more important dark blue neckline currently at 116.47 for the combined June to July head and shoulders top, which also has a double top formed from the head and the second shoulder. Well, this was breached and is now under threat of being broken for close up over the dark blue neckline. Instead of the resistances eroding what in any view was a strong bullish move up late last week, well, the bullishness overcame the actual resistances. Prices closed a little under the next overhead resistance, which is the October 2021 high at 116.92. Beyond this, we have nothing much until July's high at 117.88 and June's high at 118.29 and the downtrends that are in between there, which are 118.03 and 118.05. Now, as I have said repeatedly all this week, there is an argument that one should look at the main action from last week as a possible bullish morning star pattern of some form. And I can see the argument for that. However, up until now, I still thought the larger combined head and shoulders top and double top pattern were the more dominant pattern here. And I even gave targets for these patterns below. Or for the head and shoulders top, a primary target X1 down in the 113.10 zone, for harder to reach secondary target X2 down in the 111.41 zone, and for the double top, a primary target down in the 114.55 zone, something I pointed out last week, and a secondary harder to reach target X down in the 113.22 zone. As you can see, the primary target for the double top has already been reached. Well, yesterday's action, especially the close, puts that all under threat of retirement. I'll watch the action over the rest of this week very closely now to see if this is an aberration or something more. Finally, as I've now said repeatedly for months and months, we are set up with 7 months of this year gone by for a possible annual key reversal pattern. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between, we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now, so far today, a dip down to the top side of the breached dark blue neckline and seemingly starting to use that as a base for attempts at the overhead October 2021 high. Cable, aka sterling against the US dollar, a fourth bullish white soldier and borderline bullish white Mariposa yesterday after the previous session's second consecutive, slightly higher, indecisive spinning tops. This continues to be a sort of follow-on higher to the earlier immediate countering key reversal up and bullish engulfing pattern seen last Friday. The base of this move up is the combination of the thin congestion band made up from December 2020 low at 131.33 and the July 2023 high at 131.44, as well as the move up over the breached lower trend line, currently 132.58, of the mid-April to date expanding wedge pattern, currently at 132.58 to 139.57 on the top side. The lower trend line sits within an interesting congestion zone between 132.46 to 132.65. Now, yesterday prices punched up once more through the March 22 high at 132.98, but most interestingly punched up through the neckline of the main recent pattern here, which is the mid-May to late July head and shoulders top pattern. We even ended up closing right on the combination of the dark blue neckline, currently at 133.54, and the slowly rising mauve medium moving average, currently 133.57. This threatens now the one remaining target below for the head and shoulders top, as we have already achieved the primary target in the 131.48 zone, but we still have the secondary, harder to reach target X1 further down in the 129.40 zone. Now, I should also note that last month was a monthly key reversal down here. Beyond the dark blue neckline, we have congestion at 134.36, then between 134.83 to 135.81 and 136.21 to 136.43. If prices stabilize over the dark blue neckline and mauve medium moving average combination, then these topside congestions will be under threat. Finally, much like Eurodollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between would have a lesser outside outside year pattern. My apologies. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up now to achieve one, though it does look like we're moving towards an annual key reversal up. Now, so far today, the market is seemingly starting to use that as a base for a possible, that neckline, a dark blue neckline, as a base for the possible attempts higher. US dollar against the Japanese yen. A counter-reactionary bearish harami yesterday after the previous session's reactionary bullish white soldier. In some ways, this is still an aftershock from the earlier very strong immediate countering key reversal down and bearish engulfing pattern on Friday that left behind a 2-day pipe top pattern. Support below the market is still from the 61.8% Fibonacci line, the July 23 to July 24 move at 146.69, which was tested earlier this week but held up. Below this 61.8% Fibonacci line, we have the two moving averages of the now flatlining medium moving average, currently 145.61, and the short medium moving average, currently 145.83, plus the dark blue middle time, currently at 144.89, of the important, large, shallow, and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of the two major patterns in operation here. Now, the other pattern is the broken bright red mid-January to mid-June broken descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target up at 150.5 was reached last week, though we still have live a secondary, much harder to reach target X1 up at 158.85. Overhead, we have Fibonacci levels at 148.11 and 148.68, but the next significant resistance comes from a combination of the gold slowly declining long moving average, and that's currently 149.41, and the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Now, so far today, a follow-on lower that's now challenging the 146.69 Fibonacci support, but it's not exactly overwhelmingly challenging it. US dollar against CNH, the offshore Chinese yuan. An immediate countering bearish harami, just, and bearish double yesterday after the previous session's reactionary bullish harami, which could also be seen back then as an indecisive spinning top pattern. Yesterday could also be seen as a possible resumption of the move lower from last Friday's key reversal down and bearish closing Black Mariposa combination. The top side was capped once again by the congestion between 719.64 and 719.91, consisting respectively of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move. Meanwhile, support below was from the flatlining green short medium moving average, currently 717.93, though this has recently been on a closing basis. Now, further up, we have resistance from the dark blue neckline extension, currently at 721.49, of the late August to early November 24 reverse head and shoulders pattern. That is just ahead of the slowly declining mauve medium moving average, currently at 721.80, and the slowly rising gold long moving average, currently 724.65. Now, in between the two moving averages, we have the congestion at 722.88, which tied in with lows from earlier this year between January to March. Looking further down, we have the bright red trendline extension, currently 7:15:51 for the mid-January to late April 2025 descending triangle, just ahead of further Fibonacci supports at 7:14:95 and 7:14:48. That can be regarded as actually as one single congestion zone. Finally, a strategic observation here once again, and one I will continue to be making. Please note that the gold long moving average, currently 724.65, has been, despite some ups and downs, relatively flatlining for quite a while, so that if prices do stray away from it, they then seem to be brought back in towards it, and that applies in either direction. So far today, a small follow-on lower down to test the green short medium moving average, but not really pushing below it as yet. US dollar against the Brazilian real. A bearish engulfing pattern yesterday after the previous session's interesting inverted hammer pattern. Now, those who know amongst you will recognize that inverted hammer patterns are the subject of much debate in the technical analysis community and circles as to whether their traditional role as a bullish reversal pattern is justified or not. Now, this one was formed after the previous session's bearish open and close black Mariposa. It was also a second bearish black crow, but it seems right now not to be a bullish reversal pattern. So overhead, the market has been capped by the green short medium moving average above, currently 554.39, and further above we have the declining mauve medium moving average, currently 562.88. In between we have the bright red upper time, currently at 527.28 of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Now, this pitchfork has been the showrunner here since spring. Now, interestingly, the mauve medium moving average is also not too far from the interesting significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Meanwhile, further below, we have the purple May 24 today uptrend, currently at 543.01, which is now just exiting a congestion zone below, made up from the 50% Fibonacci line of the April 22 to December 24 move at 544.57, down to about the 540.15.16 level. This congestion also contains the dark blue neckline extension to the June to September 24 head and shoulders continuation pattern, currently 542.57. US dollar against the Mexican peso, a second bearish black crow and bearish Mariposa. After the previous session's reactionary bearish black Mariposa, the move is now directly affecting the earlier stabilization over the bright red upper time, currently at 1858.64, of one of the two recent showrunners here, and that's the robust bright red early May to late June bearish Andrews pitchfork. Plus, we're also threatened the other major recent pattern here, which is a months old and breached many times early May to late July dark blue bear channel, currently 1831.70 to 1856.32. The market reached down through the bright red upper time and touched and closed right on the dark blue upper trend line. Now, further below we have the February 2020 low at 1851.71 that helped hold up the market 2 weeks ago, that was, and then, well, apart from the dark blue lower trend line and the bright red middle time, which is currently 1826.48, there's nothing much until a Fibonacci congestion at 1817.61. Meanwhile, the top side still has the slowly declining green short medium moving average, currently 1887.55, just above the congestion band between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and the resistance at 1885.40. So far today, a seeming stabilization based on the combination of the broken dark blue upper trend line and bright red upper time, though not venturing too far above, and I'm beginning to suspect, I should say, this might just be a hesitation instead of a stabilization, which is what we're doing.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.